Hey guys, it's Uncle Dwayne again, and you may have noticed the background changed a little today. I normally do my videos at night, but my wife works from home and I'm doing it in a day today because I want to get a few of these out for you today. So, sorry for the background change, but let's get into it. Today we're going to talk about another stock that hit the 52-week or the annual low price recently, and that is Ulta Beauty. Now, the prices for this stock have changed a little bit. At the time I analyzed this stock, which was a few days ago, notice Ulta Beauty was down to $372.50. But if we look at it where it is now, it's at 379.11, and it just jumped up $6 alone today on a day where there really wasn't much movement in the market, but Ulta Beauty went up today. Let's see if it continues to do that. In any event, let's jump into our analysis. First, we're going to start with our candlestick chart because we want to see what it's been doing recently. And we noticed that Ulta Beauty has really been moving over the years. I have this candlestick chart set to 12 months now, which is a year. That means each of these candles represents a year. So if I set it on, I believe that's 2008, I could see that the opening price for this stock was $8.31 a share, and the closing price was $18.16 a share. I'm reading up here towards the top. But if I move to just last year, 2022, it closed at $469 a share. It opened at $413. Now, here we are in 2023, and like I said, a lot of fundamentally sound companies have gone down this year so far, and Ulta Beauty would be one. It dropped significantly. It's not only below the area where it closed last year, it's below the area where it opened last year. It's currently at $379.11 a share. Now let's switch this over and see what it's doing weekly. And if we look at it weekly, we notice here we are in October of 22, it was at around 417. It moved up till it got to a high of, let's say, around 529. Moved sideways a little while, and then starting in May of 23, it started to move down. It was at 379. It started to move down, down again, to the point where we are right now, 379.11. Wait, where was it up here? Oh no, up here it was at well, it was above 535 and it dropped down, came down, and here we are, we're at 379.11. So now that we've looked at the charts, let's actually go into the analysis of this stock. Okay, so we've looked at the technicals, the candlestick charts for Ulta Beauty. That let us know about the way that the price has been moving on a yearly chart, what's happening over the year time frame, and on a weekly time frame. Now let's look at the fundamentals for the company. First, let's look at the price movements throughout the year. So we see that in 2018, let's look at it. In 2018, this company's earnings per share, that's their profits, their earnings, divided by the amount of outstanding shares the company has issued, went from $8.96 in 2018 to $10.94 in 2019, $12.15 in 2020. But, and this is a little surprising, their earnings actually increased in 2020, which was the COVID year, the COVID lockdowns. Everybody was walking around wearing masks. I'm not necessarily sure why a beauty product store would increase during that year, but they did. Then we get to 2021, and there was a drop off significantly. The earnings per share went from $12.15 the previous year to $3.11 that year in 2021. But let's look and see what happened in 2022. It went back up, not only to where it was previously, $12.15, but up to $17.98 a share. And where is the earnings per share right now? It's at $24.71 a share. So the earnings per share is continuing to grow. And actually, it was at $24.71 for the earnings at the time I analyzed this stock, which was a few days ago. But if I look now, it's already moved up a little to $24.92. Now, if we look at the low price for this stock over the years, in 2018, the low price was $194. In 2019, it was $225. In 2020, it dropped to $128. But that's because the low PE also dropped. In 2021, it was $279. And in 2022, it was $342. And now, well, at the time that I analyzed it, it was at $372.50. But let's be accurate about what the low price was in these last 52 weeks. So if we go here to Yahoo Finance, it tells us the low price these last 52 weeks was $368 and the high price was $556. Okay. So let's look at, we can't look at the low price for a stock and guess what the low price is going to be. But what we can do is estimate how far that stock is going to go down by looking at where the low PE is. And we can estimate how high that stock is going to go up by looking at where the high PE is. So if I look at the low PE over these last 5 years, it was at 21 in 2018, 20 in 2019. I'm cutting off the last two figures. So I'm rounding off. But we see 2165 and 2061. Now 2020, it dropped all the way to 10. But bear in mind that 2020 was COVID lockdowns. There was a lot going on that year, so I would consider that an anomaly. And in 21, I don't know what happened, but the low PE jumped all the way, was all the way at 89, and the high PE was at 133. So I'm going to consider 21 and 20 to both be anomalies. They're odd years, and I'm not going to factor them in. And I'm going to go straight to 22, which is 19.03. And if I look at 21, 20, and 19, I could figure that the lowest that this stock's PE may fall to is maybe 19. But actually, the PE right now is at 15, which tells me that unless this year is going to be like another anomaly where it goes down to 10, this may be around where this stock bottoms out, because the low PE for this stock regularly is around 20. With other stocks, you may see some stocks where the low PE goes to 5 or 6 or 7 or 15. This one is in such high demand that the low PE goes to around 20. Now let's look at where this stock can go up to. I'm going to round off again, so I'm not going to say the whole number, but from 21 to 35, that's 14. 20 to 33, that's 13. That's 14. I'm not even counting this one. And that's 7. So, on regular, they've been around 13, but let's say, and this one has been 7, but let's go in the middle. Let's say it goes up by 10. So, if we look at where the PE is right now, which is 15.07, plus we add 10 to it. That gives us 2507. And if we multiply that by the earnings per share, not even new earnings per share, I'm going to multiply that by the earnings per share that I have here on this worksheet, which was a few days ago. So 25.07 times 24.71, that gives me 619.47. What that tells me is, based on PE ratios alone, I'm not factoring in other things as far as what's going on with the company or whatever else. I'm just looking at the movement of the PE ratios over the last 5 years and what I feel could happen this year because of what the PE ratios have done the last 5 years. I consider it very reasonable that this stock can move up to $619.47 a share in the next 12 months. Now, that's how I look at where I feel the price can go for a stock. But there's another way of doing it as well, and much simpler. And that is, once again at Yahoo, you go to Yahoo Finance, you enter in your ticker symbol, which for Ulta Beauty Supply or for Ulta Beauty is ULTA Ulta, and under the summary tab, if I scroll down, it'll show me what they project the stock going up to in the next year. So the stock right now is currently at $379.11, and they projected moving up to $528.62. So remember, my analysis can go up to $619.47. Theirs, it can go up to $528.62. Now that we've looked at the prices for this stock, let's look a little bit at the company and what they do, or how they are fundamentally, in other words. So, Ulta Beauty, well, I keep calling them Ulta Beauty Supply. They used to, seems maybe their name changed. Now it's Ulta Beauty Inc. Ulta Beauty Inc. in 2018, they earned $5.8 billion. 2019, $6.7 billion. 2020, COVID year, $7.3 billion. But in 2021, for some reason, they dropped back down to $6.1 billion. In 22, they jumped up again to $8.6 billion. Not only more than 2021, but even more than the highest in 2020, right? So, now that we know what they did overall in terms of sales and revenue, that's their overall sales. But after they make their overall sales for those years, then they have to pay off all of their expenses, rent, electricity, whatever different types of expenses they may have, maybe employees or whatever. And then they're left with the net income, which is their profit. What do they have left over after paying all those expenses? 2018, it was $555 million. 2019, it was $658 million. 2020, it was $705 million. But in 2021, Not only did their overall sales drop to 6.1 billion from 7.3 billion, but their profit dropped from 705 million the year before to a measly 175 million that year. And then in 2022, they got back on track, 985 million. Now, we know that their net income is their profit. And we know at the top line is overall sales. But when they get their overall sales for that year, and they pay off all their expenses and they're left with the profit, what percentage of their overall sales is that profit which they're holding on to? Well, in 2018, it was 9.44, which I would say is a decent profit margin. 2019, it was 9.80. 2020, it was 9.54. But what happened in 2021? Their profit margin dropped down to a measly 2.86%. I'm not sure what happened there. In 2022, they got back on track, 11.42%, higher than the previous years. So that's their income statement. Now let's go down to their return on equity. And return on equity is their return on the shareholders' equity, with the shareholders own. So the return on equity in 2018, it was 31.29. 2019, it was 36.18. 2020, it was 37.11. 2021, it dropped down to 8.79%. But then in 2022, it was back on track at 64.21. Now, something to consider when working out the return on equity. As the debt to equity increases, those figures can become more skewed. So the figure that you may be looking at, if the debt to equity is over 200%, may not exactly be 200, may not be actually what it's showing. It may be a little lower. But if we look at Ulta Beauty from 2018 all the way to 2020, the debt to equity was under 200%, and the return on equity was pretty decent at 31, 36, and 37. So now that the debt to equity has gone up to 210 in 2022, and the return on equity is showing 64, even if the return on equity is really just 40, that's very decent as far as I'm concerned. I'm not sure as to why they're increasing their debt every year, but the other numbers are looking pretty good. And speaking of debt, let's go down to their balance sheet. With the balance sheet, you want to compare the current assets, short-term assets or things they own, to the current liabilities, short-term debts or things they owe. And then you want to compare the total assets, total things they own, to the total liabilities, things they owe. So for 2018, their current assets far exceeded their current liabilities. I like to see that. Same thing with 2019. But when it comes to 2020, their current assets exceeds their current liabilities, but don't far exceed their current liabilities. And actually, in every year, the assets exceed the liabilities. But if we look at 2018, the assets exceeded the liabilities by more than 2 times. Same thing in 2019. But by 2020, it went down to a factor of maybe 1, and 2021 and 22, not so much. So their debt is starting to increase. If we look at total assets and liabilities, their assets always exceed their liabilities, but we're seeing it be by less and less. We're seeing their liabilities increasing every year. 1.1 billion this year, 1.3 billion this year, 2.9 this year, 3.0 this year, and 3.2 this year. So we want to watch the debt, but so far it's looking like a great company. They're buying back shares of their stock every year, which we like to see. And then here we jump down to the free cash flow. Now, in the income statement, we look to see how a company can make more money every year, right? We saw in the income statement how the company makes their overall sales or revenue. They pay their expenses, then there's the net income. That's the profit they made for that year. However, with the income statement, there's a little trickery that can be done on these income statements by their accountants sometimes, so that we see the money on paper, but that's not what they actually have at the time, for whatever reasons. But if we go to the free cash flow, the free cash flow is actually the money that they have in hand at the end of that year. And when we're looking at the free cash flow compared to the net income, how much money did they actually have? This one, they had 555 million on paper, but 338 million in cash. This one, 658 to 636. Speaking of millions, 705. Now, in 2020, their free cash flow exceeded their net income. I like to see that. Same thing in 2021, and same thing not actually, their net income exceeded the free cash flow in 2022. The reason I like to look at the free cash flow, or the reason the free cash flow can exceed the net income is because you may have cash flow that carries over from a previous year. Like there may be cash flow that carried over from 2019 into 2020. And that's the reason why there would be more free cash flow in 2020 than net income. Now, another thing I like to look at the cash flow for is because after the company has the free cash flow, sometimes they pay out a dividend to their shareholders. And that dividend is taken from the free cash flow. So, what we as shareholders have to be aware of is, do they have the free cash flow to pay us this dividend? Or are they actually borrowing money just to pay us this dividend? Because some stocks may entice you in by offering you a nice dividend, but they're actually borrowing money to pay you that dividend. And what that means is that they don't really have the money that they're giving you, and eventually they're going to have to stop paying that dividend. They can't afford to give you a dividend from year to year. Now, with this company, Ulta Beauty, it doesn't matter. Because you see, I do have this line, free cash flow after dividend, but it doesn't matter because Ulta Beauty doesn't pay a dividend, right? Their shares held by insiders. Insiders are those who work or are part of the corporation, and their shares held by insiders are 0.15%. Now that sounds like a very small percentage, less than 1%, but you have to consider that's 0.15% of 49.23 million shares. So it's not as small as it sounds. And shares held by institutions, 96.30%. Institutions are institutional investors, banks and other big institutions, professional investors. And why is institutions important? Because institutional investors are not as fickle as common Joe Schmoes like me and you. They're not going to buy a stock and just let it go or whatever. They're professional investors. They've researched into the companies heavily, and they look to hold on for a little longer. I would say for long term, but they look to hold on for a little longer. So, overall, I would say Ulta Beauty is a good company to look at, consider buying, particularly if it keeps moving up. And if I look at the fundamentals for the company, it's a very good company. And if I look at the PE ratio it's definitely at an attractive PE ratio to buy. We are going through some problems this time with these companies, even fundamentally sound companies, because of something going on with the economy. You see a lot of great companies that are falling to their annual low prices at this time. But with all that said, this is a fundamentally sound company at a very attractive PE. And we see David C. Kimball is the CEO and director at Ulta Beauty. He was appointed in June 2021, so not very long ago that he was appointed. But the company seems to be doing Okay, if we look, there was some hiccups. We see a lot of things was going wrong in 21, but when we look at 22, they was back on track. 17.98% earnings per share. And Ulta Beauty is in the specialty retail industry, consumer cyclical sector. I believe Nike is at the top of that specialty retail industry, and Estee Lauder. Well, I also mentioned Estee Lauder because that's another company that we had on the watch list and was looking at. And Ulta Beauty is 10th in that list. Okay, guys. And this is it. Well, try to get another video up today. If not, tomorrow we'll be looking at PepsiCo.